Ram Pitre, Senior Vice President and Head Commodities and Currency Research at Anand Rathi Commodities. Ram, hi afternoon. Firstly, a word on gold, and after the import price hike, have we seen any impact in terms of how gold has traded yesterday?
In fact, it was trading around on domestic market around 27,500 or so. Suddenly, after the announcement of 2% rise in import duty, it has gone to almost 27,800. The sudden spot of almost 300 to 400 rupees is because of the price adjustment. But internationally, the dollar's performance is keeping the gold in the tight range between $1,385 to $1,420. I think the sideways movement likely to continue, and today the focus will be definitely on the jobless claim data, which is likely to come down around 6 o'clock in US market. Things that the present trend on international market likely to continue. The upside is almost maximum, it can go up to 1,435, and the downside is 1,385. The either side breakout on international market will give the clear direction for the next few weeks. But until that time, I feel that market is likely to trade within the range.
So how would you trade gold right now, and what strategy would you recommend to our viewers?
On MCX, at the moment, it's a sell on a rally at the present market condition around because of the rupee slightly on the depreciating mode. But it has touched a low of almost 57 rupees at the moment against dollar, and it has traded now below 56.90 or so. And that if that rupee start appreciating to around 56.50 or 56.60 level, there will be some pressure on the definitely on domestic gold market. So I suggest sell gold between 27,600 to 20,640, this range, with a stop loss of around 27,760. And our target will be for today by evening around 26,400 or even 26,300 can be seen.
How would you approach silver then, Ram, and what trading strategy would you adopt there?
Compared to gold, the silver is trading in the band between 22.30 to 23.30, and that present the trend likely to continue on either side. It is breakout will give the clear direction. So I still suggest even on silver July contract, if you get around above 44,100 level, there is a level you can go short with a stop loss around 44,680, and our target will be around 43,650 by evening.
You've got a bullish strategy in crude. What's it that you're recommending?
Overall, if you see on international market, the crude oil prices are hovering around between 90 on the downside or 97, 98 on the upside. It is, and it has touched 3-4 times on the very important key level on the downside, which is $91, $92 is the 200-day moving averages. It is holding that level very positively, and it is bouncing back. And because of the rupee depreciation, on a downside around 52 level, it has touched many number of times in the domestic market, and it is bouncing back from there. So I suggest for a June contract, you can buy crude at around 5300 level with a stop loss of 52.50, and we see around say around 54.20 to 54.50 kind of a level either today or tomorrow.
A word on copper as well, and how would you go about trading that one?
Internationally, I think on LME, that $7,100 is a quite important level on the downside, and as long as it hold that level, it is likely to be supported at a lower level. But having said that, 74, 75 become again 500 will become a very important resistance level. So I suggest I am still bearish on copper. But whenever it is coming close to around 7100 on international market, I'll be buying because of the rupee depreciation part. I'm thinking that for today it is better to sell at around 423 with a stop loss of 426 for a target price of 418. The range will be around 418 to 425 for either today or tomorrow.